the regulator has prescribed that all insurance companies will have to maintain a minimum solvency ratio of 1.5, which means the assets should be 1.5 times of the liabilities. So the companies will have to keep that. So it's not as if they are making the insurance here and taking away the profit and running away. That is the solvency ratio minimum that they have to hold. Also, the companies will have to make provisions for all. There are two categories, sir, which is very important for us to understand. The first category is incurred but not reported category. The second category is incurred but not enough reported liabilities. So that's the category. So it is important for them to keep money even for that. Somebody made a claim but actually not made the total claim, and they may come back later. Do they have the money for it? Therefore, in order to make sure that in the eventuality of a claim coming a bit later also, they would have made a provision. The regulator has made the companies provide for incurred but not reported class of claims and incurred but not enough reported class of claims also. So every liability will either get covered in this or that, for which provisioning is compulsorily being made because of the regulator. And also the profits are, sir, calculated only after providing for these liabilities, which I said 1.5 times solvency, the second one being incurred but not reported, third one being incurred but not enough reported liabilities. So for all these, the company will have to make a provision and only then calculate its profits. So the profits are calculated only after providing for these liabilities, which the regulator has imposed on them mandatorily. These norms provide enough safeguards for protecting the interest of Indian policyholders. So the other question was, only LIC does your government schemes, and therefore by diluting, we're not diluting, but by diluting this or bringing foreign companies, only they will be burdened to do these social sector related activities or government schemes. Not true, sir. Even now it's not true. And through these amendments, we are not giving them any room to get away from that responsibility. So with regard to the private sector insurance, sir, insurance companies, they are actively participating in all the Jan Suraksha schemes of the government and also in Fasal Bima Yojana. PM Fasal Bima Yojana is being implemented by 13 private insurers and 5 public sector companies. Even now they are doing it. More than 15 private insurers are participating in Jeevan Jyoti Bima Yojana and Suraksha Bima Yojana. They are private companies already and they are doing the government schemes. Private sector insurers have cumulatively enrolled more than 20 crore persons under these two schemes. The government Jeevan Jyoti Bima Yojana and Suraksha Bima Yojana, private insurers have brought in 20 crore persons. So by opening it up for foreign direct investments, the mandatory requirement that they have to participate in the government schemes is not going to be relaxed. Next, sir, the capital insurance and public sector general insurance companies help them to recover from losses but not made them competitive. Absolutely wrong. The losses of the public sector general insurance companies were mainly due to increased health insurance claims during the COVID pandemic. The capital infusion actually helped them to recover from this shock. Along with capital infusion, sir, key performance indicators based on monitoring of these companies was also started by the government, and it was started around 2022. Series of measures have been taken which help them to improve even their performance. So it was not infusion to make up for their loss. It is infusion to build their business and strengthen them. So as a result of these, the performance of all these companies has started improving and their losses have come down. In fact, 2 of the 3 companies in which capital was infused have already turned profitable. That couldn't have otherwise happened.
If you like the video, do like, comment, share and subscribe.